good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar, and it is the end of the year. Traders, this video is for Wednesday, 12/24/08. I know I said in my last video I wasn't going to come out and do any more videos. I was going to relax and hang out with the kids, take a little time off. But you know, it doesn't seem to work that way. I've done everything I can to stay away from these markets. But unlike the rest of you traders, there is no way I could possibly do that. Now, I was simply an observer, and I gave us some instruction at the site in the last few days. But here's what I did, traders. We did a video. We filmed it on Thursday. The date was 12/18 for Friday's trading. In that video, I said to you traders that we were going to talk about trading an apex or wedge formation and a false breakout and how to trade them. Traders, I left you with the video, and I'm going to revert to a clip in a moment or two, but I left you with the video, and basically the video was to show you that a false breakout is about all you're going to get when you have a formation like this in a bear market. Many times you'll pop up for a day, spend another day up, and go right back down. So we assumed that that is exactly what we will get out of the S&P and the Dow Jones Transportation Average. So we went ahead and we shot a video. And in that video, I said this is exactly what should happen. Don't fall in love with the upside no matter what you do. And as it turns out, traders, this happened to be a fantastic lesson. It's been a great lesson, a great way to end the year off. So I was able to give a lesson, and I was able to teach it to many people. So how about this, traders? We'll leave off one more video. I have to do it because the lesson was so good. How can we let this one get away? One last video to show you one more trading technique to keep in your arsenal of tools that you have to help win this war, if you will, against trading markets. We all know how difficult it is. If you have a proper rule set and you follow your analysis correctly, it is price action. If you follow price action correctly, you should be able to make the calls that we're about to show you in this clip, and it certainly involves this ascending wedge. I should call it descending wedge, and you could call it an apex, a descending wedge, a descending triangle, whatever you want to call that. This is a basic rule that will happen time after time, traders. I showed you in a video from a couple of days ago I'm about to revert to. The market actually did what we expected to do technically, and now I want you to see that so this lesson is embedded in your heads. Let's take a look at this clip. It's what we call a flashback from our video from the 17th into the 18th last week. Watch the flashback, then I'll come back to you and explain how you should be able to follow this for yourselves next time you see it. Now for Friday, I want to show you something, and that something is this. Trading in an apex or wedge formation, and I want to show you about false breakouts. When you have a wedge formation, and I'll show it to you in a moment, always expect some sort of a false breakout in the opposite direction of the natural trend. Then you come back down into the natural trend and break through the bottom of an apex if in a bear market. In a bull market, traders, it's slightly different. In a bull market, if you get an apex, usually you break down through the bottom, which is false, and then blow out through the top. What I'm talking about is this. Bear market, right? We have a market moving down, so it's a bearish market. Then somehow it forms this apex, and what I mean by that is take the line and connect the highs and connect the lows, and what you end up with is a spot right here called an apex where those two lines meet. As you get closer to reaching the apex, basically you get a false breakout, traders. A false breakout means you pop up a little bit, you get a day above the line. The next day, usually you open up, stay above the line, but get back into it slightly. And day 3, you break back down into the apex. And finally, at some point, you break down completely, and it goes in its natural trend. We're in a bearish market, so to break out of the upside of an apex doesn't make as much sense as breaking out to the downside. So this is the exact area that we traded in the last 2 days. And traders, we had monster winners. You go Omni. Viva la Omni, baby. Okay, traders, now let me tell you something. It takes a lot of guts to get out in front of a camera and make a call like that, because when we left off, believe it or not, we had that apex right there, right? But we only had one day sticking out, and everybody thought the Santa Claus rally was going to come from that day. And I was brave enough to get out there and say, no way, you should get this, then this, back down. That's the way this apex will work in a bearish market. And I made that call. And traders, I have to say, especially you traders in my premium room, a round of applause for all of you. Whoever traded these last 4 or 5 days and traded based on what we said should happen here technically has had a great week. And I know because I was watching you in the premium room. Good job following the apex traders. Now, I want to show you a little more in depth of what happened here, traders. I have a couple of charts I'd like to show you right now. I'm going to bring you in, and what will happen is this. I'm going to show you the chart exactly as it looked. The ones I put on the board on 12/18. It was actually 12/17, I think, for trading 12/18. Right there, last Thursday for Friday. I'm going to show you the chart that we had on the board and what the chart looks like now. And I hope that that will be a lesson enough for you to realize how you should handle this type of apex or wedge formation the next time you see one. Traders, let's go to the charts. Okay, traders, what you are looking at right here is the S&P daily bar chart. This is the very same chart that we put in front of you on Thursday night. And we showed you a picture, and I drew it right here on the board. And traders, this is the very same chart. I drew a false breakout, and I said, if I have this right, you should see it look just like this. We popped up, that's this one, right? You should see us make a day up like this and another day and then head down and end up down here somewhere. That's what I told you should happen technically, because we're in a bearish market and we're going to have a false breakout on the upside. So if I'm right, traders, the very next chart I show you should look just like that false breakout, which means we should have another day up and then a big day down, getting us back into this wedge formation and eventually hitting the bottom of the wedge formation, right? That's exactly what we drew this for and brought it to your attention. This is how you would trade in a bear market out of one of these wedges or apexes. And simply it says a small pop out of an apex is usually a sign of a reversal to come with a drop back down into, if not through, the bottom of the formation is what's expected. Stay tuned. So now, of course, we do expect that this will make another line up and then turn around and break down and end up looking like this. Traders, now I'm going to take another chart out. This chart is going to be the S&P, exact same chart as this, but where we are today, so these lines will fill in. Okay, traders, if you compare that chart to the left to the one right here on the right, you can see that exactly what we thought would happen technically is exactly what did happen, traders. We came up for one more day, went down and put the third day in so that it looks basically just like that false breakout that I illustrated for you, which you can now see there on your left. You see that false breakout? Well, this is what we thought would happen, and look at that picture right there, traders. That is exactly what we expected, and look where we are now, the bottom side of the apex. Traders, this is a great lesson for you to learn. Here's what it should have looked like, and here is what it does look like. So I want you to realize that this is how you should handle an apex or a descending wedge in a bearish market. The false breakout above, then expect it to come back down and end up on the bottom side of the apex. Now, one more reason why we were certain that we could stand in front of the camera and give you the false breakout and then expect it to happen was because we believe that the leader of the indices is the Dow Jones Transportation Average. So the next two charts you are about to see will be the Dow Jones and the apex and what it looked like on Thursday last week and what it looks like as of today. You will see that it filled in as expected. Let's go take a look at those charts. Okay, traders, now you are looking at the Dow Jones Transportation Average daily bar chart, the one that the Dow theory, Charles Dow back 120 years ago told us that the Dow Jones Transportation Average is the leader, right? So, if that's the case, I've done enough studies to see that it is true. The very same day that we had the picture over here with the false breakout, if you recall, and I showed you in the S&P we'd get this. Well, the reason why I was basically sure we'd never get past that little movement was because on that very same day, we never got past the top of the apex line at all. The leader, like you see here, stayed and respected the top of that line. And then we knew that being that it didn't break out above, it would end up going down here. So if the leader fails to take out the upper line of the descending wedge, but the follower pops its head up like this, that is telling you for sure that you should be looking for the downside. So here's what the chart did look like when we presented it to you on the 18th, on Thursday night last week. And we expected this to fill in and merely go back down and test the bottom line. Not to break out, not to expect the Santa rally. We told our OmniX to get short. Let's go look now, traders, at what the transportation chart looks like up till the moment today. Okay, traders, what you're looking at now is the leader, the Dow Jones Transportation Average chart, and it is the exact same chart you've seen in the last video with that flashback. However, that was right here. Here's where we were in that video. Traders, look what happened. It respected that top line, went down, 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 and kissed the bottom line, traders. Just as we expected technically. You cannot beat technical analysis. I say a round of applause for technical analysis, baby. You cannot beat it, traders. Let me tell you something right now. We trade price action. We trade these moves. The price action has all the fundamentals built in. You cannot try to figure out what the market will do based on all these government reports. That's being a fundamentalist. Make it pure and simple. Go right to the price action and analyze the price action, and you will see that the fundamentals always come out in the charts first. So, traders, you see those charts? Before we go any further, one more round for technical analysis. I mean, come on. There is no way. There is no way I should have been able to make that call, traders, unless technical analysis really works. Now, we're going to go back to the board one more time, and I want to show you a little something here. Let's illustrate that one more time for anyone that may still not have it right. Traders, you're in a market and the market is trending lower, right? Boom, boom, boom. Now let's say it moves down, it moves back up, it moves down, it moves back up, it moves down, it moves back up, and you connect those lines. When you connect those lines, you come to what's called an apex. Now, what I normally will expect is if you are in a bearish market and you have one of these descending, ascending, you name it, wedge formations, before you get to the apex, you simply will have a false breakout to the upside. It will turn around and end up down here. By the time it gets to the apex, it will break out to the natural trend direction. The natural trend direction in this case is bearish. You get a formation like this. It is bearish, traders. Expect the false breakout and trade this for what it's worth. When you get back down under the line, trade it at least till it gets to the bottom line. And once you get past the bottom line, you have more downside coming. That is the lesson that I wanted to make sure I drove home to you traders, because boy, oh boy, that happened on those charts I just showed you right before your eyes. Traders, I hope these videos are helping you to stay more in tune with these markets. I really hope that these videos are helping you become a better analyst. You can't even imagine the amount of email that I get from traders that tell me they've been trading 24 years, 15 years, 2 years, 8 months, and almost all the letters that I receive are people saying, Oscar, you have changed my life. You have made trading for me a completely different thing now. I can trade with less emotions. I can seem to understand when and why a market will move. Traders, this is what we teach at the Omni Trading Academy. I assure you of one thing and one thing only. If you come to my trading academy, I will make you a much better analyst and give you the proper mentality behind how to use that analysis. Make sure you come on down to my site. It's www.livewithoscar.com. Grab a free membership and make sure that you are here to learn. Now, traders, basically, I don't do a lot of trading no trading between now and at least the first week of January. Whatever happens in the next few days in these markets, I will say this, even something this powerful doesn't apply for the next few days. Forget about the analysis. Forget about trying to trade this until a couple of days into January. That is my advice to you. And let me tell you something. I have been hemming and hawing in my videos. How many times did I stand there and go, traders, when retail sales come out in January after December, these stores aren't selling nothing, it's going to be big layoffs. Well, let me tell you something. I have been reading the papers for the last few days. These retailers are dead. There will be many, many retail stores going out of business at the end of this year, coming first quarter next year. Just watch the results, traders. If you don't believe me, read Wall Street Journal, read Investors, read Barron's, read all the industry rags out there, Financial Times, read magazines. You will see what I'm talking about here. We were able to telegraph this fact to you, looking at charts and how they've been acting for the last 6 to 8 months. We knew, especially in these last 8-10 videos, that we should be telling you, watch out for more downside traders. No Santa Claus rally. It didn't come. You may get something between Christmas and New Year's, but that is nothing to think about getting long for. Traders, again, go back and watch some of my last 8-10 videos. Many of those you hear me telling you the same fact, and you've heard me talk about the real estate shoe. You've seen residential real estate. Forget the commercial. You haven't seen that shoe drop. Well, it is dropping like this right now. I am telling you, commercial real estate is going through the tubes. It stinks right now. You need to be careful. With commercial real estate going down, brings more bank failures, brings major, major layoffs, brings companies that were expanding to a halt. It's not going to be a pretty picture. Now, I'm not the worst optimist in the world because, traders, I was bullish all the way up until middle or end of last year. I was a raging bull. I didn't think twice about the downside. But now now I'm in a bear market. That's when I was in a bull market. This is a bear market. In a bear market, you got to be bearish-minded. You got to think about never falling in love with the upside. Don't fall in love with the upside. Remember, it's a bearish market. Bad news is coming after the first quarter reports of this month. Probably the January reports that show everything that happened in December will easily push us down further. Do not fall in love with the upside. Remember this lesson, the ascending wedge. I keep saying ascending, my apologies. That's when we get to the bull market. The descending wedge formation. If you see it in a bearish market, expect a false breakout before it ever gets near the apex and wait for it to go down to the natural trend of the market, which is much closer to that apex. That's where you get that. That's the lesson in this video. Remember everything that you learned this year, traders. I have had a wonderful ride this year, traders. Oh my goodness. You Omniacs, the Omniacs, the whole package that we put together. The Omni Trading Academy. I have had a fantastic year with all you traders. Many of you are quite astute and very funny, and I've enjoyed what I've done with you traders. And I promise I will be here all next year to do more of the same. So if you want to be with me, if you'd like to look over the shoulder of a 27-year veteran analyst and trader, you come on down to the site. I keep a live camera on me with live audio as I teach, as I give lessons, as I instruct, as I help you build the proper mentality to get through these rough and tumble markets. All right, traders, happy New Year, baby. I can't wait for 2009. I'm going to be all over it. I hope you look at these videos. I hope you watch many of the videos. I hope you're taking notes because many of the lessons I give in these videos absolutely happen over and over again. Let me tell you something. I watch how they teach third graders and first graders and kindergarten kids because my wife volunteers to help out the teachers. And it's repetitive. They pound it into those children's heads. And you know what I've learned? That's the way I teach my analysis. It helps so many people. I pound it in till it finally hits home. Some people got cement up there. You know how that works, right? But I'm there with the sledgehammer going, listen closely. Whatever it takes to get the point across. And I am here to help you Traders, I will be as redundant and repetitive as possible until I see many of you really shaping up. And I will say this, I am so impressed with the membership and with so many of my students, the way you have progressed this year. One more round of applause for you students at the Omni Trading Academy. Now, hey, wait a minute, one last thing. We didn't even get the results. I mean, I know the results, but we didn't bring them out. The trading contest from last week, Dip comes in number one, VIP from the side, baby. Dip, congratulations. You traders have won the contest. 3 cash prizes will be given out. Please claim your prizes. I'm sure Bob's already taken care of that, but if not, come on down, let us know. Make sure you get your cash prizes deposited into your account. Now, Dip, one thing I will say, you cheated a little bit, Dip, you know. She won the contest, but she used the Omni trades to get there. That's not what you're supposed to do. But glad to see Omni won the contest, right? But very good, Dip. As we love to say to cite to one another, up yours, Dip. Thank you so much on that. Congratulations for winning the contest. All right, traders, remember, I'm out of here. Remember, say this to yourselves every morning, every afternoon, every evening, because it'll help you keep your emotions out of trading. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.